So my name is Sachin, and I am going to talk you through portfolio at Acumen. Before I start, I think so many things that Dave, you said, resonated with me. And in agriculture, as I was just looking at statistics, 70% of the people who live in poverty in the world are smallholder farmers. And more than 50% of the people who are hungry, ironically, are agriculturalists. So the problem is, absolutely huge. And two things that Acumen has focused on is incomes and resilience. So increasing the incomes of smallholder farmers, but very importantly, increasing their resilience to everything that a smallholder farmer faces when he wakes up in the morning and before he goes to sleep. And I think Ethio Chicken is a classic example of working on both of those problems. Because obviously, the chicken farming increases income, but as Dave was describing, many farmers will use chickens as a supplement to the fields that they will till for crops. And if something happens to the crops or the rain or it's attacked by locusts or something, then they still have the chickens to be resilient to what is going on. So Acumen in agriculture has invested $33 million in 23 companies across 3 continents. And our hope is, Shiza, a little bit to have those ripple effects from our investments in agriculture flowing through, as they have done in the case of Ethio Chicken, not through a country, but it's amazing that we're talking to Ethio Chicken about expanding to other countries in sub-Saharan Africa. And that is also why we are just in the process of launching a new funding vehicle for agricultural companies and entrepreneurs. And would you believe it? It's called the Resilient Agriculture Fund. So, agriculture, hugely important part of our work. But first, I'm going to give you a small snapshot of what Acumen does in portfolio. So we've invested cumulatively about $113 million. And that's been invested into 79 active companies in our portfolio. And the reason for that is we, of course, invest behind impact. But our promise to all of you in this room is also that we will invest and then we will return capital from our portfolio as our companies become successful. And we will recycle that capital behind the next innovation. And as you can tell from the number of 29 million, we have returned and recycled about 25% of the 113 million that we had invested. And this continues to fuel Acumen's work in finding the next innovative idea, the next committed entrepreneur, and backing them. Of course, Acumen does not invest only behind financial returns. And the biggest return that we invest behind is the low-income consumers that we impact. And with our work, we have now impacted 232 million people. And an important number is the next one. More than half of those people live below the poverty line. And that's, of course, the target segment for what Acumen is aiming to do. Now, the work of Acumen does not finish with the 113 million that we have invested. We want companies like Ethio Chicken, like Delight Design, like M-Copa, to get capital from other providers, which then continues the work. And we want those companies to grow and those companies to scale. And for the amount that we have invested, our companies have attracted more than $500 million, which has furthered the work that Acumen started at a time when those companies were young and risky. And I think that's a very, very important number because that's the way we are going to create the examples which then will move ahead. Switching quickly to 2017. 2017 on investments has been a year where we have been very deliberate about the new investment capital that we put out, which will end the year at about $6 million. And the reason for that is a couple of things. Firstly, we have focused quite heavily on returning and recycling the capital, which I was speaking about on the last slide. We have also focused ourselves on delivering on the promise that Acumen does not only provide capital. our entrepreneurs and our companies require a lot of capabilities and services which surround that capital and make that capital productive. What we often within Acumen call post-investment support. So we focused a lot of our energies on post-investment support. And it is also true that we spent quite a bit of time raising funds to back the investment work that we will do over the next 2 to 4 years. Now, we've invested across the 4 sectors that Acumen focuses on. We have backed with about 2/3 of our capital new ideas. The very important pie chart is the last one. Acumen stands here to take risk. You can't go into early stage enterprises, try to be risk averse, and put in large quantities of very safe capital. And equity, which is 3/4 of the capital that Acumen puts into its companies, is the most risk-taking form of returnable capital. And we go in there, we back that risk that we should be taking, we back the entrepreneur to get them to scale, but that can only happen if you actually invest in equity. I'm going to go deeper into one sector, but I did want to cover the other 2 sectors in our portfolio, which is education and healthcare. Hugely important sectors, and we lay a lot of emphasis and focus on these. I wanted to start with education and really talk about this at the second bullet point. Now, I come from India. And in India, 50% of the people are under the age of 26. And that is considered India's demographic dividend. And the basic thought is that if this, for a country of about 1.3 billion people, if we can get these 600 million people employed and productive, that could fuel the growth of that country over the next couple of decades. Now, the issue is that after many of these young people pass out of school, it's not obvious that they are employable or they're going to be productive. And from being a dividend, if they don't get into jobs and they don't contribute to the economy, the needle can move back in exactly the opposite direction, where you could have hundreds of millions of young, unemployed people with nothing to do, with no livelihood, and with all the problems that can snowball out of that. One part of the work that we do in education, therefore, is in skill development. We have companies like LaborNet and EduBridge. And as the name of the last company suggests, these are companies which are trying to create a bridge for young people who are passing out of school and providing them 3-month or 6-month programs which can make them employable as people who are selling financial products or working in retail stores or working in India's business process outsourcing sector. So they're trying to make these people productive. So that's the sort of work we are doing in education, and we continue to do that. Let me just talk briefly about healthcare. The World Bank did a study a couple of years ago and found that the number 1 reason why people who have crossed above the poverty line slip back below the poverty line is an emergency of health in the family. So the father has had an heart attack or somebody's met with an accident, they have to pay a large sum of money, they take debt, and they come back below the poverty line. And therefore, providing quality secondary and primary care, but in an affordable way, is critical if that drop down below the poverty line is not to happen. And Acumen really focuses a lot of its healthcare investment in trying to find and back technology solutions or cost solutions to make that possible for low-income consumers. And we continue to look for some of the companies which even Carlyle spoke about, like Health Cubed, to actually find those solutions which can work in countries in Africa and Asia. Now I'm going to slip into energy, and we're going to talk in a little bit of detail over here. But let's briefly just look at the problem. 1.3 billion people, 1 in 5 on our planet, does not have access to electricity today. And in much of the financial press, one reads about universal electrification. And there is this hope that in 15 years, we will have universal electrification on the planet. But I often wonder whether people are doing the math, because it's going to cost $45 billion a year for the next 15 years for universal electrification the way it's currently designed. What is going into the sector today is less than 50% of that 45 billion. And the question is, what is going to happen if we are really expected to reach any form of universality of electrification in a reasonable period of time? And that makes me believe that unless we innovate, and unless we take risk, and unless we deploy capital in new ways, we are going to come a cropper as planet Earth on bringing these people electricity which is affordable and accessible. Now, let's start with the first one. People say, is enough innovation happening? Actually, innovation is happening. The cost of the LED bulb, the cost of the solar panel has fallen dramatically over the last 15 years. The second technology innovation which is happening is the mobile phone. The mobile phone and payment systems running over the mobile phone have spread rapidly. More than 80% of people in Kenya today can pay for a service over their mobile phone. So that is happening. Even business innovation is happening. Companies are taking this technology and cost differences and applying it to their business models. So there is something going on over there which seems to be working actually reasonably well on the innovation side. So what's the problem? The problem is that enough capital is not willing to take the risk to back this innovation, to take it into the market, and to make it work for low-income consumers. Let's look at a company like Sierra Leone. It's got 7 million people on the western coast of Africa, and it's been through a number of crises. It's been through a 15-year civil war. It went through Ebola. And now, for the last 5 to 6 years, it seems that things are relatively stable in that country. Out of the 7 million people, 90% do not have access to electricity today. And looking at what's happening in that country, universal access will happen not in the next 15 years. It'll happen by 2080. Towards the end of this century is when 7 million people in Sierra Leone will have access to energy. So, when you look at this picture and when you talk to people who have capital, they will look at a company like Sierra Leone and say, hey, it's too small. Like 7 million people, that's not really a market I want to go to. They will say it's too risky. They will say civil war happened 15 years ago, it could happen again. And the question that comes to, I'm hoping, many people's mind is who is going to do this work? And the answer to that is that we will. With the support of many people in this room, we have now approved an investment of $500,000 into a company called Acumen. This is taking what is called the solar home system, pay-as-you-go model, which has succeeded in other parts, in other countries like Kenya, and taking it to Sierra Leone. And this company is working hard through pretty challenging conditions, and Acumen, with its capital, is taking risk, trying to see whether those 6 million people who are still sitting in the dark in Sierra Leone can have affordable electricity in their homes in a reasonable period of time. So that's the work that we are doing under what we now call the Pioneer Energy Investment Initiative. And some people in this room and some people who are not here today are supporters of making this work happen. And as I look at this, there's also an evolution and a learning in what Acumen is doing in energy. Typically, everybody focuses on generation of electricity. So the big solar farms which are being put up in India and the solar home systems which are being put into the houses is basically energy access. The evolution in our work is also, it's not enough to give people energy. We also have to talk about what are people going to do with this energy. And some of the pipeline we are seeing today is talking about productive use of energy. So can the energy products we give energize a sewing machine, which the lady of the household can use to generate a little bit of income, even though she's spending time, as Dave was talking about, in the house for most of the day. Or solar water pumps, which are today water pumps basically use diesel. So they're expensive and they pollute the environment, with all the stuff that those diesel generators put out. Can we convert them to solar? 40% of crops in India are lost to wastage because the crop spoils before it actually reaches the market. Can we have a refrigeration solution which provides small cold storages for smallholder farmers? So that's the sort of work that we're trying to do with the Pioneer Energy Investment Initiative, and it's a movement in Acumen itself. And what do we hope to achieve? These are actual companies in Acumen's energy portfolio, and the green ones are in the validate stage. Those are typically the early investments that we make. And the pink one out there, which is high on financial performance and high on social impact, would be a company like Delight Design. So if we can take some of these green dots and make them into the pink dots, then the ripples, which Shaiza was talking about, can turn into the next revolution in off-grid access for low-income consumers. And that is what Acumen's work in energy aims to create. And why do we think we can do it? 3 reasons. Acumen arguably is the first investor into off-grid energy in the sector, probably in the world. Second, we have the largest portfolio across sectors and across countries and continents in off-grid energy today. And third, we have found a way to listen to our consumers, listen to our companies, and build it into the work that we do. And if we're able to do all this, we will not only focus on the financial performance of our companies, but I think the big revolution in the way Acumen works today is listening to the customer. And listening to that customer, we build into investment decisions, we build into the way we manage our companies, and happily, our companies build it into the way they manage themselves. And that's an exciting, wonderful change in the way Acumen now looks at social impact and financial performance. But for that, and to explain more on how we work with lean data, I'm going to hand it over to Tom. Thank you.